Hey, what's up guys, welcome back to the channel. So today's video is going to be very short and simple. Today we're talking about the best TradingView indicator. That's the best trading indicator that you can use on your TradingView. So this indicator is not only going to help you, it's also going to help you increase your win rate. It's also going to make you have more confluences, gives you more confirmation for a particular trade you want to take. And to set up this indicator is quite very simple. So it just takes a few minutes to set up the indicator, and I'm going to show you guys right now on the chart. So now that we're on the chart, guys, literally you have to go to your indicators, and the name of this indicators is RSI, so Relative Strength Index. So you can just search for RSI. So whenever I search for RSI on your indicators tab, you can actually see it here. This is it right here, the Relative Strength Index. So you click on it, and just like that, it has been added to your charts. Now, the way it looks right now, I know a majority of you guys are not going to like the way it looks because there are too many lines, too many confusions. You're probably wondering what's all of this. You're probably wondering that you cannot understand this. So let me tell you how you can make it much easier. So basically, you double tap on the indicator. You double tap the indicator. So once you've double tap on the indicator, it's only going to help you to open the settings. So this is the indicator name right here. So you press settings on indicator, and now these are the things you have to turn off so that it make your indicator much easier to read. So the only thing that's going to be left on is RSI. The RSI MA, based MA, you off it. The upper band and lower band, leave the upper band and the lower band, and the upper band should be in 70 while the lower band should be in 30. The upper band should be in 70. The middle band, you can turn off that. That's not useful. Then the RSI background fill, you can also turn off that. The overbought gradient fill, you will turn off that too. The oversold gradient fill too, you turn off that. And that should be all. So you can leave it, you turn off everything except from the RSI upper band, and then the RSI lower band. And now, since the RSI upper band is in this particular color and the lower band is in this color, to make it more visible, if your chart has a dark theme, like a dark background, if your chart has a dark background, leave it as white. But if you're using a white background chart like me, you can actually change it to black. So I'm going to change the two of them to black. The color of the 70 and the 30 to black. So I'm going to leave it as black, and I'm going to press OK. So now you can see this is the 70, the upper band here, this is the 30. This line up here is the 70, the line down is 30. Then also the last setting I want you guys to do, the RSI color. If you're using a dark background on the chart, make the RSI color white, and if you're using a white background, make the RSI color black. So I like to change mine, since I'm using a white background, I'm going to change it to black also. And that is just it. There is no other setting that you have to do. These are all the settings you need to do for this indicator, and now you can go ahead and start using the indicator. So now let's proceed to how you can actually use this indicator. How does it help you in the chart to give you more confluences, to give you more confirmation? So basically what the RSI does is that the RSI is used to signal when the market is currently overbought or oversold. So if it's overbought, there's going to be a divergence. A divergence simply means that on the chart, the candlesticks will be going upwards, while on the RSI, which is what we just added now, the candlestick, the line will be going downwards. And I'll explain it to you now. So look at this situation now. Look at a situation like this here now. Let me just zoom into this particular situation now. So a situation like this right now. A situation like this. How do we know that market is about to sell to the downside? How do we know here right now that, okay, how are we going to predict that this market was currently, you see that previously, the market was just buying to the upside, was buying. So how do we know that from here it was going to fall to the downside before continuation of buys? This is how we know. So whenever you are using the RSI, I will say you combine the RSI with a supply or a demand zone, a support or a resistance zone. Just, it's as easy as that. So you wait for the RSI at a particular zone or a particular level before you actually take the trades. So let's say in this particular case now, if I can actually go to somewhere like the 4-hour time frame. So this is NZD/USD. If I can go to the 4-hour time frame for that particular case right there, we see what can we see that happened there? We can see that the chart was currently in a 4-hour supply zone right here. You can see that. So this was our last supply zone here. So I've talked about supply zone and demand zone and entries and everything in my last video when I talked about how to analyze the market and every other thing like that. So I've talked about supply and demand zones and every other thing like that, support and resistance and everything in my previous video. So if you want to check out what those mean, you can watch my other videos. So but in this video, we are currently in the supply zone, a 4-hour supply zone. So now we can go down to the 1-hour time frame. And let me show you how the RSI works in this case now. You're going to see how beautifully the RSI works. So now, as price, so I'll actually prefer that you use the 1-hour time frame for RSIs because it it's much more stronger on the 1 hour time frame than it is on lower time frames like that. So now that we are on the 1 hour time frame, you can see that in the candlestick chart, price was going to the upside. So you can literally see that it was going to the upside. It was creating a series of highs and highs. You can see it going to the upside. But now that I've turned on our RSI, let me zoom in on this. Let me zoom in on this. So on the RSI, so I'll also zoom in on the charts. So we can literally see that the price candle was going up on the candlestick. So let me even turn on line chart so you can see it clearly. So you can literally see that on the line chart it was going up. Yes. But look at what's happening on the RSI. So let me mark it for you now. So this high, it was going up on the candlestick line chart, while on the RSI, it was actually going down on the RSI. So this is what the divergence means. A divergence simply when the market is overbought or oversold, and on the candlestick chart, it's going to be going to the upside or to the downside, while on the RSI, it's going to be going to the downside or the upside. The RSI is going to show an inverse price action than what the candlestick chart is showing. You understand? So whenever that kind of thing happens, just know that the current market, in this case now, just know that the current market is currently overbought and it's about to sell to the downside. And what can you literally see? You can see that after the RSI give us the confirmation that yes, it's already overbought, so it's about to sell to the downside, and price has already mitigated a 4-hour demand zone, a 4-hour supply zone. So price has already mitigated the 4-hour supply zone, and the RSI was already showing us that the price is currently overbought. So we know that that's our added confidence that yes, this price is about to fall. This market is about to go to the downside. And you can literally see what happened. The market just mitigated our 4-hour supply zone and then sold to the downside, to the nearest support and resistance zone, to the nearest structural level zone. You understand? So the same case also occurs here. Let me show you guys. It's happening very, very frequently in the market. So this is another case right here now. I'm going to show you. I'm zooming in on this. So market sold from this upside and then it arrived at a structural level. So when they arrived at the structural level, what can you see that happened? We saw that on the candlestick chart, which is converted to line chart. But on the candlestick line chart now, you can see that price was going down here. And now on the RSI, you can literally see that price was going. Sorry, I'll zoom in this a bit. You can literally see that on the RSI chart, price was going up. You see, price is going down there, and here price is going up. What does that signify? This currently signifies that the market was already oversold. That is already oversold at that particular structural level. You understand? So since the market is already oversold at that particular structural level, there is a divergence on the RSI one more time, which is indicating that this market is currently oversold and is about to reverse to the upside. And what can you see that literally happened? After the RSI occurred, you literally see that price went all the way to the upside again from the structural level. So the way you can utilize your RSI very effectively is combining it with levels of support, resistance, supply, and demand. So whenever your market is approaching a level of support or resistance, or approaching a level of supply and demand, just check your RSI to see whether that market is currently overbought or oversold. And once that has given you a confidence that yes, this market is overbought or oversold, then you know that your entry has given you more confidence, more confirmations that yes, you can actually take that trade and go your direction that you're implementing or you're expecting. I'm also going to be showing you more examples. There are actually more examples on the chart. So here is another example. So you can literally see on the candlestick charts, what can you see that happened? At first, remember this is the market level. This is actually a structural level in the market. So you can see that on the candlestick line charts, the market was going to the upside right here. Then what can we see on the RSI charts? You can literally see that this high on the RSI charts, so you can literally see this high was going to the downside. So this higher high on the candlestick, the higher on the candlesticks was a lower high on the RSI. And that what do you know that? What do you know that is? That is a divergence. A divergence simply means the market is currently overbought in this case and is about to sell to the downside. And you can literally see what happens next. The market just continues to sell to the downside. So it happens very, very frequently, guys. Extremely frequently. It's something that happens every time in the chart. I'm going to show you multiple examples so you guys can see that yes, this is actually very, very valid. So another level now, let's look at this again. So market got to our structural level here. You can literally see market got to our structural level, and our structural level you can see market went to the upside. Our structural level here, it went to the upside. Yeah, and if you look on the RSI chart, what can you see? Market went to the downside. So that signified here that market was currently overbought again and it's about to reverse to the downside, giving us added confluence. So our first confluence was that market was in a structural level. That was our first confluence. The second confluence now, to give us more confirmation that price will actually sell from that market level, is the divergence on the RSI, indicating that the market is currently overbought and is about to reverse all the way to the other direction, the downside. So you can literally see there are actually a lot of examples. This is just on NZD USD. I think I'll also go and show you guys this example on other pairs too. It happens quite frequently in the market. So look at it here. It's going to happen here too. It always happens. Sorry. So it always happens in the market. So we can see that market was currently at this structural level one more time, and you can look at on the candlestick charts, on the candlestick line charts, you can see that price went to the downside here on the candlestick line charts, while on the RSI, which I'm going to show you guys now. So you can see on the RSI that price is going from downside to up. So you can literally see it. So on the candlestick line chart, price is going to the downside, while on the RSI charts, you can see price is going to the upside. Another divergence, simply signifying that this market is currently oversold at that market level and is about to reverse to the other direction. And you can literally see what happened afterwards. Market just bought. It gave us a change of character confirmation here. It mitigated our supply demand zone right here that caused a change of character, and then it bought to the upside. So in case you don't understand most of these terms I'm using, demand zone, supply zone, change of character, this and that, I've explained that in my other videos, so ensure that you check out those other videos before you actually watch this one, okay? If you ended up getting knowledge from this video, don't forget to hit the like on the video, subscribe to this channel, follow this page, and I'll see you guys in my next video. With that being said, do have a lovely, safe, and an amazing day. Goodbye, everybody.